Who's the best Nasdaq ETF for income, growth, how they handle taxes? We're going to break them all down and give you the answer to each and every one of those questions. Hey everybody, it's Doug the Retirement Guy with all your monthly ETFs. We've taken the time to break down each and one of the Nasdaq ETFs to give you the answer of who's giving us the best income, who's giving us the best growth. We're going to add in there the total return and also who handles the taxes the most efficient way. So if you are an income investor, looking for growth, or just want to have something in your portfolio that's handling taxes properly, we're going to give you the answer and the information that you need for each and every one of these. After that, we're going to have a series that's going to break down each and every one of these ETFs to give you the answer in detail so you can see more about each of our funds. Hey, if you like what we're doing, hit that like button. Don't be afraid to hit that subscribe button. And look down below if you want to support the channel. Hit that Patreon. We'd love to have you part of the family. Let's get into today's video. We do have to do the disclaimer, and that is past performances don't guarantee your future results, and this information in this video is for educational and informational purposes only. I am not a licensed financial advisor. I am just one who's been studying this stuff for years. The example and suggestions discussed here are basically not suitable for all individual situations, so always contact a financial advisor before making financial decisions. The Nasdaq ETF funds that we're going to compare to. The first one is the QQQI from NEOS. Then we're going to go to the Goldman Sachs GPIQ, and then we're going to go to the Curve, KQQQ. Now this one's going to throw some people for a little bit of a loop. We're going to put out there QDVO, and this is the Amplified CWP Growth and Income ETF. Now, I have to put an asterisk to this one. It is not strictly a Nasdaq-100 fund, but it is heavily influenced by it and often compared due to the high concentration of the mega cap technical stocks. And when we sit and break these down, you'll be able to get, after this video, you'll be able to get a lot of these funds that we've broken down. I explain exactly that, how QDVO, I know we'll say that the benchmark is set up with the Russell 1000 for growth index and the S&P 500 growth index, but the fund follows the Nasdaq 100 so closely because of the high concentration of those tech sides of it. I felt we had to put this into the portfolio. The next one we'll talk about is the IQQQ, and that's the Pro Shares. Then we'll get into JP Morgan's JEPQ, and then the TAP Alpha TDAQ. Now another asterisk here with the TAP Alpha, TDAQ has not been out there for a full 12 months. Okay, this thing came out, I believe, in July of 2025. So that put us basically about 3 months out, so about 9 months total information that we have. But we're going to show you how well TAP Alpha has done against these other 6 players who have been out there for over 12 months. And it'll be some impressive things I believe you're going to see as we talk about these. Now the NASDAQ is a stock market index that tracks the 100 of the largest non-financial companies listed on the NASDAQ stock market. What makes it unique is there's no banks are allowed. The rule, the Nasdaq-100 excludes financial companies like banks and investment firms. This is the primary reason why it feels so techier than the S&P 500. The modified market cap weighting, the bigger the company, the more influence it has on the index. However, NASDAQ periodically rebalances the weight so that a few giants like the Apple or Microsoft don't completely drown out the other 95 plus companies. And then the international flavor. Unlike the Dow Jones or the S&P 500, which focus on U.S. companies, the NASDAQ-100 includes non-U.S. companies, as long as they are listed in the NASDAQ exchange. Now, what's inside the sector breakdown? As of 2026, the index remains heavily concentrated in high growth industries, which is like technology. It's at 64%. Consumer discretion, right around 20%. Healthcare, about 4%. And telecommunications, about 3%. Now, the heavy hitters, the performance of the Nasdaq-100 is driven largely by that Magnificent Seven and other semiconductor leaders. As of May 26th, the top holdings typically include that technology that I just said, 64%. That's coming from NVIDIA, Apple, Microsoft, Amazon, Alphabet, which is Google. So you can see it's heavily related right to these select companies in that technology. So let's start our challenge. Let's first look at yield. Since everyone always recognizes yields and understands yield, in a lot of different ways. And on this channel, I have to say this right now as my little asterisk on the thing. I don't always go after yields. Yields will tell us what's going on with a fund, but it doesn't tell the whole story. So we don't chase yield, and that's not just because you're going to have the biggest yield, are you going to be the winner of the fund? What we want to know, though, is how much income can we generate from one of these particular funds? Which one pays the most? So let's take a breakdown where we sit. So let's start with the yield information, which is what a lot of people look at, a lot of people track, and a lot of people I hate to say this, but they do the yield chasing. So whoever has the highest yield is the one I'm going to invest my money into. Well, that's not always the true way of doing it, but this is what a lot of people look at. So let's take a breakdown of the yields first. Coming in last place, that is going to be the IQQQ from ProShares at 7.74%. Next, we're moving over to Tap Alpha TDAQ. Now remember, this one is not a full 12 months. So already with this fund going up against the big guns that are 12 months old, this one's already stepping above at 9.54. Our next fund is going to be the Goldman Sachs GPIQ at 9.66%. So look at what Tap Alpha has done versus the Goldman Sachs. Kind of impressive in my book. Next, we're moving over to Amplified QDVO at 10.31%. Then we'll go into JEPQ. Finishing into our top three now, JP Morgan's JEPQ. Now, this is the fund that's in a lot of retirement funds that's been out there. It's got a big assets under management and representing a 10.51 over a 12-month period. So very impressive there. And again, I hate to throw this one out there. Remember, Tap Alpha, it's about 1% down, but it's only had about 9 months total compared to these guys with 12 months. Now, who will be our number one? Well, let's take a look at number two first. And that is going to be NEOS Nasdaq QQQI at 13.89, which gives our highest yield winner to Curves at 14.56 KQQQ. I believe, truthfully, that the whole thing comes down to is that daily covered call. And understanding, this is not a daily ETF. This is not a fund that's paying out that. What it is, it's a daily ETF that they are able to change their strategy on a daily basis. Okay? So they're watching the market, how it's going. So they're not putting these things out there 30 days out, a week out. They're making their daily calls so they can raise the price, change the price as the market changes. And you can see you definitely gain some advantages with that. But overall, I'm telling you, our top three, which of course is KQQQ, number 2 at QQQI, and number 3 at JPQ. I think all three of these represent some very, very strong opportunities out there. When we take a look at number 4, at the QDVO, again, I don't think any of these have really bad numbers across the board. Now let's get into the growth challenge. Who's going to grow and deliver the most growth out of all these funds? Some funds are designed for growth. Some are designed for growth and income. It's going to be an interesting package here. So now let's give you the growth information, the latest growth percentages for these top Nasdaq ETFs. And we're going to start off at the bottom, and that's going to come in at the Tap Alpha TDAQ. Now remember, that one's only working on 9 months. Our next category is going to be QQQI from NEOS at 14.50%. Now this shows you very clearly how the difference between only a few months is a big difference for growth in comparison. So we're basically talking about a 6.25% difference, and with only 2 months difference, 3 months difference, somewhere right in there, the difference in growth. Our next one, JEPQ from JP Morgan at 14.55%. When doing this comparison, I saw JP Morgan with the NEOS, very, very similar numbers. They were both very, very similar in income, in the yield. So very, very impressive type applications between those two funds. Now our top four. At number 4 is going to become QDVO. Remember to amplify the growth in income. This one is, it's not a true hardcore Nasdaq-100. It is one that is influenced heavily by the Nasdaq, coming at 19.05. So what they're doing and giving you that different strategy and that different mix has made some major changes, but not enough to get into the top 3. So at number 3 is GPIQ from Goldman Sachs, 23.36% growth. Very, very strong numbers, very impressive numbers using the Nasdaq-100. Our final 2, who will win it here? At number 2 is KQQQ, the curve, at 24.05%. So you look at number 2 to number 3, very, very close to each other. And the number 1 comes from ProShares, IQQQ, with a 26.10%. When you take a look at that number across the board, almost a 2% gain over curve, almost a 3% gain over third place, and then a easily 18-point difference from Tap Alpha. So you can see that the ProShares has definitely put the effort into growth on their particular fund. So long-term growth can equal long-term wealth. That's a big driver of these. So where are you at? Are you looking for income? Are you looking for growth? And there's so many different ways to use these funds accordingly. So that gives you the first 2 categories. Now the category I like the best is total return. So the total return challenge, what this gives you is a combination of both. It gives you the combination of the growth plus the income, putting it all together to tell you how well the fund actually did. So a lot of times, and we don't have this as much with Nasdaqs, but a lot of times you'll see things that will have high yields and losing money on the growth side. Then you got to calculate that down. So we're going to take a look at the complete strategy of total return. So let's take a look at the total return information, giving us the total percentage on return. Remember, these are going to be your total returns of combined income and growth for the full picture. That number at the bottom of the barrel is going to be the Tap Alpha TDAQ at 18.63%. I know I continue saying this, but just remember, Tap Alpha is only 9 months old, giving you a total picture of 18.63. It's kind of our benchmark we're using to see how well others have done. Now, coming in next is going to be JEPQ at 28.06. So you can see a big 10% difference between a 12-month fund and a 9-month fund. We now go to QQQI. It's so funny how QQQI and JEPQ are very, very close to each other. 32.11% total return versus the 28 by a 3% difference. But they always are right next to each other. Now we get into QDVO, amplified, at 33.03%. Now giving us our final 3. GPQIQ from Goldman Sachs comes in at 37.05%. IQQQ from ProShares, 37.99%. And our winner of the event, 44.49%, is KQQ, the Curve program. That daily cover call made a big difference when it came to the growth and came a big difference when it came into the income side. And they have basically in 2025 has given you the best overall performance across the board. So KQQ first, IQQ second, and JEPQ number 3. So overall, who's our winner? Well, you got to talk taxes when you get into this point. I got to be honest with you. You got to talk taxes because there's a big difference. And I'll show you immediately when I've been talking to you about the NEOS QQQI and the JEPQ from JP Morgan. Those two have been almost right next to each other from yield, from growth, from total returns. But here's the advantage. NEOS pulls away because they use the tax status of those Section 1256 contracts using that 60-40 program. So 60% of their distributions are coming to you as long-term capital gains. 40% will become to you as short-term. While the JEPQ, all of their distributions are treated as ordinary income. So you're going to pay less taxes if you're in a brokerage fund under the NEOS than you would in JPQ. So that big advantage goes over to QQQI. And you have to calculate this stuff in of handling your taxes across the best. So when we take a look at the first 3 funds, QQQI, the Goldman Sachs JPIQ, and the Curves KQQQ, all use those tax statuses of those Section 1256 using that 60-40 type blend. Now, when I break down each one of these funds separately, that you'll be able to look at the videos over the past next week, you'll be able to see how each one of these play into it, because some of them are also using return of capital, which will help even reduce it even more. Now, as we move over to QDVO, that uses primarily ordinary income. Again, that's going to make a big difference when we go head to head of who's the best fund. Same thing with IQQQ, ordinary income, and then some special capital gain potential. So that's where you're going to get into your ROCs and accordingly. So these are some of the things you really have to look at when you're dealing with these funds. How does taxes handled? Where are you putting the money into? How are you going to put it into place? So overall, the winners of this one is the QQQI, the GPIQ, and KQQQ. They lead in the tax handling programs. So there's another piece of the puzzle that leans towards those funds. So who is the king of the Nasdaq? Well, bottom line, based on the yield, the growth, the total return, and how they handle the taxes, I personally believe KQQQ from Curves gives you the best overall package. It gives you a solid 24% growth, which is only second to IQQQ. But it gives you a nice 14.56% year yield, better than all the rest, and a better total return as a total package. Plus, it also uses that strong tax advantage falling into that play right there. Number 2, IQQQ. And number 3, GPIQ. Now, I'm not saying any of these funds are bad, even though you finished closer to the end of the package. I'm not saying any of the funds are bad. What I'm really coming to you and saying, that these are all very, very strong programs, and nailing it out to just 1 to 2 or 3, if you're at some in the top 5, there's a different advantage for each and every investor. Like I said, if you're looking for big yields, there's a different fund for you. If you're looking for just growth, there's a different fund for you. If you're looking for total returns, totally different fund. If you got tax issues, different funds. But overall, guys, I really believe that the KQQQ has shown to be the strongest one out of the mix. So let me know what your thoughts are. Do you believe and agree with that KQQ is the leading in the crown? Or do you think another fund is actually better all the way across the board? I'd love to hear your input, exactly how you feel about these funds. So don't be afraid to put a comment down below. And if you like what we're doing, hit that like button. And as just a side note, Each and every one of these will be broken down individually in a separate video. So you can take your favorite one and then take a look deeper into it. How do they handle the taxes? How did they generate their income? Where's the growth from? And can we see it that it's going to be long term, or was it just a flash in the pan? The other one to always remember, number 7, TDAQ. That one's only 9 months old, and it's competing with the top 6 players already. It's competing in a lot of different areas, only 9 months into it. So that's another one that I always say, keep an eye on it. Tap Alpha could be the guys in the future coming up in the top running. But again, thank you for watching. Remember, leave a comment down below. Love to hear from you.
Thank you for watching. Press the